Let's dive into key highlights from the listed banks on the Colombo Stock Exchange for the first half of 2024. The listed banks reported a solid 12.98% year-on-year growth in net interest income, driven by the expansion in their loan books and strategic deposit repricing. The lower interest rate environment led to a narrowing gap between high and low yield deposits, prompting a preference for liquidity and boosting CASA deposits. There has been a remarkable rise in fee and commission income, particularly from card services and electronic channels, reflecting the growing adoption of digital banking services. With enhanced credit quality, improved recovery initiatives, and increased clarity in external debt restructuring, banks saw a significant reduction in impairment charges compared to last year, improving overall earnings growth. Operating expenses have risen across the sector, indicating higher costs associated with ongoing operations. While tax expenses for most banks have more than doubled compared to the same quarter last year, putting additional pressure on net profits. Despite that, net profits surged by an impressive 83.31% year-on-year, fueled by higher net interest income and lower impairment charges. All banks are maintaining their Tier 1 capital and total capital ratios well above the minimum requirements, while the majority of listed banks have announced debenture issues in 2024 to enhance their capital buffers. Looking ahead, here's what we expect for the listed banks on the Colombo Stock Exchange. With a lower interest rate environment, we anticipate an acceleration in credit growth as loan demand rises. This will boost interest income for banks. Although we expect loan book expansion, net interest margins could see a slight decline due to the lower interest rates. The growth in loan book will continue to enhance interest income, driving further profitability for banks. As the gap between high yield and low yield deposits narrows, we expect a preference for liquidity, leading to a gradual rise in CASA deposits. The recovering economy and improvements in the external sector are expected to boost trade-related activities. As inflation decreases and disposable income rise, banks will likely see increased fee and commission income. We expect growth in both fund-based and non-fund-based income, driven by loan expansion, fee income, and favorable economic conditions. As collection and recovery process improve, impairment charges are expected to decrease, supporting overall earnings growth. Taxes remain high for banking sector, but profit growth is still expected. Overall, these factors paint a positive picture for the future of the banking sector on the Colombo Stock Exchange, with multiple growth drivers set to enhance profitability despite some challenges.